Good morning, guys. Good morning, everyone. How are we doing today? How are we doing today? Has been our trading week so far. Hope you're making most of the week. All right, welcome back to today's market color session, the London market color session for today, being the 21st, 5th of 5th month in 2024. Want to say welcome. Thank you for joining today. Anastasia, Christian, DLPC, Bukun Salako, Maje, Michael Audu, Olushola, Mr. Oluwaseyi, Oni, you're always around. Thank you so much. I want to say a big thank you to you all. So right about now, we'll be going straight into the chart. I want to see what the market is doing today. As you all know, Tuesday is meant for our commodity currency analysis and also indices. By indices, I mean the US 30, US 100, and also S&P 500. I want to see how those markets, those asset class are doing for the week and how we can also make money from them if the opportunity presents itself. So we'll be going straight into the chart to see what the market has for us this morning. Before we go, I want us to, the normal routine that we have, which is to please share the link to this Zoom session, share the link to as many as possible person you know. This link will be helpful to do well to, spread the gospel of this market color. So much value is being shared on this Zoom session. So you can as well propagate it to as many as possible. As many as possible, will be needing this market color. In fact, if you're a trader, you need to be here regardless of your trading style, because what we discuss here is very comprehensive, right? It's not limited to a particular trading style. We talk about indicators, talk about market structure, those are trade market structure, even the institutional guys, the ICT kind of fellows, they are also being mentioned in the market color session. So can do well to propagate the gospel to as many as possible so they can join on this market color session. All right, give me a few minutes. Let me bring up my markup. Let me bring up chart as earlier mentioned. Okay, I think markup is here. All right. Okay. Sorry, did not. Still loading. All right. All right. Let's start with our NAS 100. Our NAS 100 from the daily time frame, like we had earlier mentioned, that was last week, earlier in the week before, previous week before, we said that we are bullish on across board, regardless of the pair, both US 30 and also NAS 100. We already established that fact that we are back to bullish trend. We are previously bearish, but now we're back to the bullish trend on daily time frame. And we had this markup around here. That was last week, right? On the 4 hours setup or time frame, I remember we had a particular setup we're looking at for the H4, right? As a last week price was still around here, dancing around because of low inactivity in the market. However, we had a markup that we all right. I'm trying to see. I'm going to look at the specific area. Yes, I can see it. On the H4 time frame, what did we have last week? We saw that price broke this level, which is kind of a box pattern failure. I believe you are all familiar with that concept now. If you're not familiar yet, find your way to the bootcamp. We're going to discuss that properly again one more time. So we had a break of this level, which we anticipated it was going to hold for it to continue the previously bearish trend that started. However, we didn't see this level hold. What did we see? We saw a massive break violation of this level to the upside, right? What the price do? Price pushed up to the upside, and then we said, if we remember, you can watch the recap of the video, the recording of the video on our YouTube channel. Just last week Tuesday, you're going to see what we discussed. Last week Tuesday, last week Thursday, one of those days. So we said that we are expecting price to come back to this level, tap into this region, and then continue to the upside to give us a new high, to create a new high and clear the previous high that was created. And this is what happened that day. But this is looking very, very vague. Let's go to H2, which is the 2-hour time frame, where we marked out specific level. If you could remember, we said we had 3 points of interest. I'm going to mark them out. We had this FVG. We are very strongly, we are very, yes, we are heavily invested on this FVG. Yeah, because it was so perfect. It lined up with this area that was violated perfectly, right? And once we saw that area, we said we're going to buy from this region. Said if this region means hold, we're going to also look at buying from this place, because it's also lined up with an area where we saw a violation, a failure, a box pattern failure, kind of, in this arena here, right? If this thing hold, the last one was around this place, which was, I think, the H4 order block. Yes, the H4 order block that was just lying below here, right? However, we were very, very concerned with this. We are very, very concerned with this because its price, if you remember what I said on Tuesday, last week Tuesday, I said indices respect a lot, most of the time, right? Technically speaking, not factoring sentiment and other fundamental, but technically speaking, from technical perspective, indices respect a lot of FVG and order block. Most of the time, you can backtest, right? Backtest to see yourself. Most of the time, they respect FVG that forms around key levels, right? Once your FVG is able to, if you see an FVG around key level, you should mark that area very well, because most likely, often than not, price is just going to tap into that level and then see it reject to the upside. So this is what happened last week. We saw price tap into 50% of that FVG, 50% of that FVG, and then let me zoom to the upside. This was a perfect trade setup because we had anticipated what's it called, this guy, and then we saw it played out very well. Let me change the color of this to probably no, it's not need changing the color. My stop loss will just be slightly below this guy, right? And we said, even from our analysis the last time, the overall target is this guy, and we're expecting the previous high to be cleared. If you remember in that previous video, we're expecting the previous high to be cleared, right? 32 pips to get 206. I think it's a fair deal, right? And the reward is 1:6 RR, which makes a lot of sense. So this was what played out. We're expecting this, and then it's played out perfectly during the course of the week, right? On US 100, that's NAS 100. What am I waiting for? Price has cleared this new high. It's normal. We begin to see different range, a range, right? Like a trending, not trending market now, a ranging market happening. So we want to see a clear break of structure, either to the upside or downside. Clearly, structure is bullish. However, price is ranging. That's clearly the previous high, created a new high. We are waiting to see what can happen. If you look at this, let me delete this markup. If you look at this, we see price trying to form a kind of double top again, double top to slam to the downside. However, nothing is clear for now because we are clearly bullish from daily time frame, from weekly, daily, 4 hours, we are clearly bullish. So however, anything we're seeing on H2, H1 might not hold significantly because of the bullish momentum currently at play for now. So we can just sit back to see what the market is going to do. We are currently ranging in this place. Let us wait for market to break out. We want to see a clear breakout. This price action here is quite messy. It's nothing that can give us a clear direction of where we are going for now with this kind of price action. We want to see a clear break of structure either to the upside, and then we'll now see what we want to take. For me personally, I'm still very bullish on this guy. I'm even seeing the buy setup again. Yeah, I'm waiting for price to even come to 50% of this long week. Price coming. Price to come to 50% of this entire week. We are bullish already. Uh, 50% is here. This guy here we had as inducement, structural liquidity for me, right? That's the low that was formed before the previous low. Where is it? This last low before the protected low here. So this is going to act as structural liquidity that's going to be consumed, right? Price is going to consume this and then tap into 50% of that fair value of this entire week, and then we should start seeing push to the upside if the buy will still continue to the upside. So I'm looking to enter from there. Let me go on lower time frame, either whether I'm going to see something very significant. Nothing yet for now. Nothing yet for now. Nothing yet for now. On NAS 100. You see what I said? Price is very, when it comes to NAS 100, the price action on NAS 100 is kind of very unique. It respects a lot of FVG. Look at this. See price tap into 50% of this FVG and then push to the upside. So you can just find a way to integrate this to your trading system. It's powerful when it comes to the indices pair. That's US30 and NAS 100. They're very powerful. So that will be all for today on NAS 100. You can quickly look at US30. We had also a level marked out on US30. However, okay, you can see how price reacted to all of this. You can see how price reacted to all of this FVG. You can see how price reacted to all of this FVG. It tapped into this FVG and then boom to the upside, clearing the last the previous high we had, right? Clearing the previous high, give us a new high, and then it's back to that area, right? We can from this is giving us a clear indication of kind of a temporary bearish direction. We want to see a break of this and then a retest into this other block, but I'm not willing to sell across board now on US30. I want to see a proper break of structure to the downside, and even regardless of that, H4 is very bullish, very bullish, very bullish. So for now, we're just sitting out. The main move which I was expecting has happened already. But today, I'm just watching to see how the market is going to react to all of this price movement. If I'm going to sell, it's going to be short term, which I don't plan to sell for now because of the clear momentum that is supporting the buy direction. So for now, I'm just staying out, looking at what the market is going to do. That will be all for today on an analysis on US30 and NAS 100. If you have any question, you can ask in the chat box for a question, any commentary, any gray area we want more light to be shed on. So you can ask a question in the chat box. You can ask your question in the chat box. If you have any question, you can ask in the chat box. If this session was helpful, you can type also in the chat box before my colleague is going to come up and take on our own session of commodity assets, discussing the commodity assets, what is happening in that side of things. All right, guys, I want to bring to us once again while we type a question or where we're still gathering our comments, that we're coming to Abuja is just 9 days to go. Traders Bootcamp Abuja is 9 days to go. Just 9 days from today. You can begin to plan, prepare, ensure you avail yourself, ensure you find yourself there. By all means, ensure you take out time. If you need to request for a leave from your workplace, ensure you do that. By all means, ensure you're there. If, like you all know, there's a private, all sessions are value packed. Believe me, all sessions are going to be fully loaded, right? However, there's an exclusive session, 1 out of the 6 sessions, which is a paid session where you get to, discuss, personalize your personal question. You're going to get personalized answers, deep questions you want to be answered, probably one-on-one questions you need to be answered. So you're going to, there's a session for that. All you have to do is to pay a token of $100. However, there's a discount currently going on that, about 40% discount. You can reach us on our WhatsApp, and then we're going to respond to you, right? That session is paid. It's a paid session. We're going to have 6 sessions. 5 of them are free, totally free. 1 is just a paid session. If you're interested, send us a DM on our WhatsApp line. It's going to be typed in the chat box. You can do well to send us a DM on that WhatsApp line. Ensure you plan, ensure you prepare. It's on the 30th and the 31st of May, right? We're just talking about next week. Next week. Yes, we're just talking about next week. So ensure you plan, ensure you prepare. If you have any question, you can type in chat box. In absence of question, we're going to go on a very short break, where after the break, you're going to be seeing my colleague, where she will analyze the commodity index. Cheers and God bless, guys.
Hello, amazing people. Good morning. Welcome once again to today's market color session. As usual, this market color is done by us at VFT, and it is powered by Octa. So without wasting much of our time, we're just going to dive right into the chart and see what the market has to give today. I believe you can all see my screen and you can all hear me. All right, so on the weekly time, I'm using naked chart today. I know some of you might be wondering why. I couldn't use my indicators today because of some technical issues, and that indicator not being on this particular laptop that I'm using. So I'll be using naked chart today. All right, so let's look at AUD/USD, shall we? What do we see on this time frame? We see structure to the downside. Clearly, you can see how AUD/USD has been trending to the downside. However, when we go to the daily time frame and you zoom in, you realize that price eventually broke out of this resistance level, which we had for so long. I'm going to mark it out so you can see that level marked out on the chart. Price has broken above it, right? So where exactly do I think AUD/USD is now heading to? If you're looking at your charts and you've been following our market color sessions, it'll be easy to point out it'll be easy for you to figure out the diagonal liquidity that we have all the way right here. There's so much liquidity residing here. And then we also have a fair value gap right at this level. So I believe, sorry about that. I believe AUD/USD is going to buy all the way into there's diagonal liquidity, and then the 50% of the fair value gap that we have right here. All right. On the 4-hour time frame, structure is clearly to the upside. So you see that our bullish bias for this guy is still strong. Price is fractal. If AUD/USD continues buying, the weekly time frame is eventually going to catch up. So this is still buying as well. What do I think AUD/USD is going to do? I'm just going to draw out this Fibonacci. This basically just helps me calculate the reversal of the swing that I see, like it's the one that moves the market. So I'm going to draw this swing to see where I expect AUD/USD to reverse to before the buying move is continued. So I would prefer to draw this entire move as my swing today. I'm going to draw this entire thing. Now, what do I see in between this swing? So many liquidity residing inside. Look at the fair value gap that we have right here. Mark it up. Right before that, we see our fair value gap. Mark it up as well. Did I mark out the fair value gap? Okay. I did, but the colors are kind of confusing. So let's change that up so it's more visible, shall we? So this is the fair value gap. There's a liquidity residing around here, although it's safe to say that price already came and tapped into this, but price has not tapped into our fair value gap. So what do I see AUD/USD doing? This is what it's going to do before it then goes back to tap into the diagonal liquidity we see on the upside and of course the fair value gap. So short term, I'm looking to catch this reversal on AUD/USD from where it currently is to where I expect it to go is about 100 pips away. So if I see this reversal happening and I see entries formed, by all means, I'm going to take this particular trade. Are we together? Please let me know in the chat box. I need to know that I'm not talking to myself. Are we together on this particular one so far? Leave an emoji in the chat box for me, please. Can we do that as fast as possible? All right, thank you. So that's pretty much it for AUD/USD, right? This is what I see, a reversal back to go catch up the diagonal liquidity that we have marked up. The next we're going to look at is NZD/USD. By now, you should be familiar with the fact that I only look at commodity currency pairs, which include AU, NU, and USD CAD. And as usual, I'm going to start from the weekly time frame as well. Now, in this case, it's very similar to what we see on, or what we saw on AUD/USD. Structure is to the downside as well. On the daily time frame, structure is also to the, it looks bearish to me, although price already broke above this level. Price broke above this level already, but I still see more of a bearishness on the daily time frame. Looking at the 4-hour time frame now, the bullishness is more clear. This basically is our what price is currently doing right at this point. So structure is currently to the upside. So where is AUD/USD going to, and NZD/USD going to as well? We're just going to zoom out and look for liquidity points because that is what drives the market. Price is always moving around to look for liquidity. Price is only going around to look for liquidity, right? So do we see any diagonal liquidity around here? There's a bunch of liquidity here. Look at how this candlestick just kept going back and forth. So chaotic, right? So I see a lot of liquidity here. However, I'm trying to search for a fair value gap at this level. We're going to have to zoom all the way back to see if there's any fair value gap around here. Price already cleared this one. So we might, there's one here. There's one right here. So we're going to mark that up. So this is where I see NZD/USD trading to the upside right here. From where price currently is to the next diagonal, to the next liquidity point for NU to trade to is over 100 pips as well, right? So 2-hour time frame, what do we do? Let's calculate the reversals. Let's see where price is going to trade into before it eventually goes back up to tap into our upside liquidity. You could also use liquidity points here to mark them out and see where the reverse to grab and then continue, or you use Fibonacci, which just serves as a calculator to calculate the reversal of price. So we have all of this marked out. These are swing. See the Now, what are we looking out for? We're going to look out for diagonal liquidity. We have that right here. Look at these two candlesticks that we have here. And then right below that, we have a fair value gap. So I'm seeing NZUSD reverse all the way back in here before it then starts to buy, right? So for now, the trade of this session for me, provided I see my entries, is to catch the reversals of AU and NU, basically selling before the buy move is then resumed, okay? So from where price currently is to where I'm looking to sell to, this is a lot of pips. Sorry about that. I have is sore throats anyway. But yeah, this is what we're looking at. So what are we going to be doing now? We've already marked out levels we're looking at for AU and NU. What you can do right now is to watch the chart and look for entries. Watch the chart and look for entries. For those of you who use naked chart to do your analysis, you could just watch out for either box strategy for your entries, or you'd use the base. You look for a base formation, and I don't see anyone here. This happened, but it's kind of violated because price went all the way back in here. So what I'm basically looking out for is a continuation, a base formed, a continuation pattern, and then look for variations on the lower time frames and take these reversals to the downside. Take these reversals to the downside. All right. Okay, so let us now look at USD CAD. Let us look at USD CAD. It's been a while since I used price action. I didn't even know all of those writings were still on the chart. So what do we see on the weekly time frame of USD CAD? This is in a range. Price has not broken above this level. It's just been doing up, down, stuck in a range on the weekly time frame. On the daily time frame, we see structure to the upside, but if you look into structure, you realize that price already broke below this level that we have right here. So price broke below this level. So many liquidity, it looks like they just grabbed liquidity, traded into this fair value gap. So we should see some sort of reactions from where price currently is. On the 4-hour time frame, structure is also to the downside. Structure is to the downside here, reacting based off the daily fair value gap and diagonal liquidity that we saw it just tapped, and we should be expecting moves back up, right? We should be expecting some moves back up. So as I did on the other pairs, we'll just draw out this swing and then look for where price will reverse to, and also look in for diagonal for liquidity points and fair value gaps that would hold price in the reversal before it then continues. So there's a bunch of liquidity around this level, a bunch of liquidity lying around this level, right? So let's mark that out. And then we now have our fair value gap just above it right here. So the premium level I'm looking at USD CAD buying back into before it continues. The structure we see is gradually forming on the 2-hour time frame is right here. You can write out these levels or marking out. And I might not be catching the reversal of USD CAD though, because I don't really like how chart looks. What I'll be focusing on is AU and NU to look for entries to catch the reversals. For this, I'm going to wait for USD CAD to trade back into this level, and then entry patterns formed, I pull the plug. Pretty straightforward analysis. We can look quickly at Forex Live to see if we have any news that would, I think I saw one earlier actually. So let's quickly look at that. So for USD CAD, you already see one news, one outlook that we can look into as well. And this is the fundamental overview. In your free time, you can decide to go through this but you see how all of the fundamentals are broken down to give more understanding of what we're seeing the market do, right? On the daily chart, we see the USD card consolidated, just as we highlighted, right at the key support zone. And we can also find the confluence of the trend line, So this is where the buyers keep stepping in with a defined risk. So basically what we're seeing here is more bullish moves for USD card, right? So just as we had said on the chart, we're going to be buying it back and then take what we can, wait and see what the market will eventually do. If it's going to start forming more bullishness for the trend to change, we're also going to take part of it. If not, we're going to catch the reversal for the buy and keep it moving. I'm trying to look through and see if we're going to see more news for this guy. All right, so that's pretty much it. We have this particular one here, which is the Australian. I just saw it, but I passed it. So let's go back. Let's open this one, dollar, because what happens to the dollar also influences the pairs that we're trading. So what this guy is basically telling us is that the dollar continues to keep steady at the start of the week. It's finding a bit more footing across board, right? For now, the overall mood is steady, but it's also kind of tentative. And the chart has also been drawn here. However, if you're looking at the chart, you see that this is our EUR/USD, and we see how price, for those who trade EU, price already broke below this moving average. And what this basically means is that we're seeing more bearishness for this guy. The same thing for the AUD/USD. Price also broke below the moving average that these people have on their charts. So basically indicating more bearishness. So price has fallen below their respective 100-hour moving averages. So the near-term bias has shifted to being more neutral. Same thing for NZUSD. In other words, the dollar bulls are wrestling back some control on the chart to start the week. So more strength for the dollar, more weakness for AUD/USD, and more weakness for NZUSD. All right, so yeah, that's pretty much it for my session. I'm going to be handing over to my boss. Good morning, sir.
Abigail, good morning. I also have a cold and a little cough this morning. Good morning, everyone. Trust that we're doing great. Okay, very quickly, Abby, there was something you showed us on USD card, I think daily, or AUD/USD daily. AUD/USD daily. AUD/USD daily. Just daily? Okay, fantastic. This is what I saw. Is this what I saw? AUD/USD. You've analyzed USD card. I think it's USD card. I think it's USD card. This is not what I saw on the AUD/USD. Okay, so good morning, everyone. Yes, USD card. Please zoom in. You were saying something, and I said where price is right now, right?
Yes, sir.
Where price is right now. You're bearish on this, right?
Yes, sir. But short term, I'm going to be buying the reversal before the bearishness starts.
Okay, and that's because price has tapped into the fair value gap.
Yes, sir.
Remember, guys, we're always saying the principles, the building blocks, the recipe. Price has tapped into the fair value gap. That's one. Price has broken a flip zone, previous resistance at 1.3600 before the fair value gap, 1.3600 before the fair value gap was formed. Before that fair value gap was formed. That's between 19th of April, from 19th of April. Sorry, 19th of March, 19th of March. All of that, 27. So you see the low there, the high there. The fair value gap broke to the upside. Then we now see it creating liquidity. Creating liquidity. And then lastly, returning. So thank you, Abby, for that. And thank you for your views on both sides. So let's have someone look at that quickly. So remember what we said. the building blocks of our strategy. A resistance has been formed. After the resistance was formed, price broke through the resistance and formed a fair value gap. After it formed a fair value gap, price came back down into the fair value gap. It has grabbed the liquidity. It has gotten to the order block, the origin of the fair value gap. It has gotten right there. So we are thinking that, yes, there may be a flip zone with price moving to the upside, right? But if price obviously breaks below 1.3600, or so based on this now, we can see price move all the way up to 1.3700, which is about 70 pips away, 1.3700, into that fair value gap, and then come all the way back down. If it comes down and it breaks this level and closes below this fair value gap, then we know that we're going down all the way. However, there's a possibility of price breaking the high of yesterday, breaking the high of day before yesterday, breaking the high of the last 4 trading days, and going into that fair value gap. What do we use ultimately to confirm this? You can check correlated assets like the other currency commodity pairs. You can also check correlated assets like the crude oil to see what effect it will have on this. So I just said to flag that because I know some of you are looking at that and wondering, this is a break and retest. Why are we not buying it? With regard to sentiment, right now, sentiment is looking very, very interesting. Let's see Euro USD. Okay, where's our box pattern? Where is our most visible, most recent box pattern? Where is our shoulder? Where is our sweep? That's one box pattern there. That's the shoulder, that's the sweep. There's another box pattern below it that price has traded above. Exactly. So do you see why price is stalling? For 2 reasons. How many of you can see why price is stalling? Looking at box pattern and box pattern failure. How many of you can tell us why price is in a range for the last 4 days? Who can tell me why? Can type it. So on the lower shoulder, what has happened? On the lower shoulder, we see sweep, we see break of structure to the downside. We see price going back to close that huge fair value gap caused by the sweep. I don't know if this makes sense. So there has been box failure on that lower sweep. Why? See the shoulder, see the sweep, and see how price broke above that shoulder and that sweep and is now finding support. However, just above it, there's another shoulder and there's another sweep. I don't know if this makes sense to anybody. So that may be the sweep that price wants to start selling off from. So how do we watch this? You can draw your diagonal liquidity for the last 2-3 days. If you zoom in, you see the diagonal liquidity for the last 2-3 days. Or you show it on the lower time frame, you see diagonal, not even there. The last 2-3 days, Exactly. So you can see the diagonal liquidity. That's the diagonal liquidity there, all the way from there, yes. Even from the low of 1.0810, extend it to 1.0810. Extend it to 1.0810. Exactly. Do you see the diagonal liquidity? Where is the fair value gap? Around the flip zone. There's a fair value gap below, exactly. So we've shown you two places of liquidity, the diagonal liquidity and the fair value gap. So if price has tapped into that place, we may likely see a run of liquidity to where? 1.0818. Sorry, 1.0800. Is this making sense or is not making sense? Is it making sense or is not making sense? So that may be what will happen. It will break to the downside. And of course, we'll be able to catch about 60 pips thereabout, 50 to 60 pips thereabout. So just watching that. So I will repeat some of the concepts. We look at a previous high or a left shoulder. You must train your eyes to identify left shoulders. Then you look for a sweep that broke through the left shoulder or the upside down shoulder and grabbed liquidity, and price came back into that range. Then you see if there's any opposite liquidity to be grabbed, whether it's an external liquidity or an internal liquidity, whether it's diagonal liquidity or a fair value gap or a low, you mark that place because price can literally snap all the way down to that level. All right, so these are the concepts one uses to trade. Shoulder, sweep, break of structure. If it is a regular box pattern to the upside, you see a shoulder, then a sweep of that high, then a break of structure to the downside. Then you see price returning to that shoulder or that fair value gap. Then you see price collapse down. And when you see this on the higher time frame, pay serious attention to it. If you are planning to buy, if your bias is for a buy, your top down is showing you is a buy, you look for a left shoulder, upside down left shoulder, an inverted left shoulder. Then you wait for price to sweep below that shoulder, grab all the stop horns, then go back into the range and form a fair value gap. Then break structure upwards. Price will return to that fair value gap of 50% of the fair value gap or the other block just before the fair value gap. And when it returns there, it will reverse and then you have your buy reversal. All right. So make sure you understand these concepts very well. For example, the concept of diagonal liquidity. See another diagonal liquidity below 1.075, right where you are. There's a diagonal liquidity. If you zoom in, sir. If you zoom in. Exactly, that's a diagonal liquidity, a trend line liquidity. You can push it up to touch those ones inside, since that one is already a mitigation. No. Yes, but make it smaller, make it shorter, make it shorter. Stop at the candle before that's fine. That's fine. Zoom in a bit. Zoom in a bit. Do you see there's a fair value gap there too, although it's very narrow, almost imperceptible? But do you see there's draw that fair value gap, please? Draw that fair value gap, please. Are you seeing the fair value gap? Is this no? Price has tapped. Okay, draw it, sharp. Price has tapped into that. I'm talking of the fair value gap. Exactly. So do you see what we are seeing again? Diagonal liquidity, horizontal liquidity, trend line liquidity, straight line liquidity. That's what price does. So you keep marking all these places. If you notice, that's what price has been doing. It will capture. So look at what happened 23rd May. 23rd of April. Sorry about that. 23rd of April. We are not in 20. Next tomorrow is 23rd May. Exactly. Zoom in. Zoom in. Do you see what happened there? Do you see what happened there? If you can zoom in a bit, or zoom out rather. It's too big now. Zoom out and go back some more. Exactly. Do you see that fair value gap that was created and the liquidity and how price grabbed it? So that's the diagonal liquidity there. That's the fair value gap. Maybe you draw it so they'll see what we're trying. This thing we're trying to see, it has played out before. diagonal liquidity, fair value gap, flip zone. Exactly. Exactly. Let's zoom in. Let's zoom in if possible. So you must know these concepts. Where is the trend line liquidity? Where is the fair value gap just before the trend line liquidity? Exactly. So see the trend line liquidity there. You can see the trend line liquidity. Price tapped. There's a trend line liquidity from the 24th of April. You just see green, 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 green candles, no red at all. So that's a diagonal liquidity. Exactly. Terminating in a fair value gap. So what did price do? Price snapped all the way down, cleared the liquidity, tapped into the fair value gap, and respected the flip zone. You see the flip zone from 17th, where previous support became resistance. Let's scroll a bit. Let's scroll a bit. Do you see the same thing happened here? See the fair value gap, see price coming to tap into the fair value gap. All right, so these are the components. We'll keep reminding you. These are the components of liquidity and overall bias based on correlation. Oh, this is where it should go. Then you come back to the lower time frames and start marking all the potential liquidity levels. And there's liquidity at equal highs. There's liquidity at equal lows. There's liquidity at other blocks at swing highs. There's liquidity at fair value gaps at swing highs. And there is also external liquidity, which is the direct opposite liquidity of where you're coming from. Once you understand these concepts, they are building blocks. So see how I've marked diagonal liquidity, fair value gap, diagonal liquidity, fair value gap, diagonal liquidity, fair value gap. Some of them have already been filled. So train your eyes. If someone can even do a markup of the last 3 to 5 days of Euro USD, AUD USD, that's amongst those watching us. So AUD USD, USD card, and use these components. Show us the order block, show us the diagonal liquidity, show us the fair value gap, and tell us how you use sentiment to arrive at that. This being all I have to say, except you have specific questions for me. Except you have specific questions for me. Anyone with specific questions? Seems it's clear on GU. Okay, let's check GU. Yes, GU throughout okay, it's a lot clearer on GU. Yeah, it is. It is. Then if you even zoom to see what's happening today, I'm expecting the GU to sell off today, intraday on the 15 or the 4-hour chart. I'm expecting a brief sell-off on GBP USD. Because if you look at it on the daily, see what has happened. Who can tell me what looks like is happening on the daily? There was a box pattern that failed. That was a box pattern that failed. Then price moved below it. But now price has closed above that box pattern, which indicates that there's strong buying pressure, right? However, this close can still become a liquidity sweep. Then where would the new shoulder be? Where would if this place becomes a liquidity sweep, that's one shoulder. Even where it is currently, that yellow line is a shoulder. That yellow line below, yes, is a shoulder. And this can be a sweep. And price can break to the downside. So that's why you see the indecision, because there are so many scenarios. There's box pattern failure of the shoulder at 1.26, 1.26, where now, I don't know. Then there is also another shoulder above. Then there's also a last shoulder. So this is going to be very tricky, except price just breaks to the downside immediately, breaks below 2693. If price breaks below 2693, it will continue going down, down, down until it gets to that other fair value gap, which is about 1.2683, which is about 100 pips. Not a bad trade if you took it. when it matures out. If you take it when it matures out. So that's a fair value gap, right? So once you see that fair value gap, price will respect it. That's a previous resistance zone. And it looks like the fair value gap has flipped price from buyers to sellers. All right. I hope this is helpful. Thank you very much, everyone. Over to you, Leko. I don't think there are any more questions. Sir, can we look at DXY? Oh, yeah, let's check DXY. Although it has been checked repeatedly, you came late, sir. You really came late. So this is DXY. Clearly, you can see what has happened. Break of structure to the downside, tapped into that order block. Now it's looking like it's coming out. There's an order block above it at 105. There's another block at 105. No, below 105, maybe 104.95, 104.95. But that's the fair value gap now. You can see the fair value gap. So if price closes above that fair value gap, which is around 105, then we know price is going up. Because now you look and say, it's giving me a buy, it's also giving me a sell. We're going to use gold. Sorry, we're going to use closure, candle closure. If this up move closes above that first value gap, taps into 105.50, but can't go any higher, boom, price is plummeting down. And where will price go? Price will go to the fair value gap that was formed 18th to 19th of April. All right? So look or draw a second schematic where price doesn't go above that 23.60 leg. Exactly. And then come and break it and go to that other 103.13. You are right there. That's what can happen again. That's what can happen again. Because that's how price typically moves. See the diagonal liquidity, see the fair value gap, see the twin tower variation. All into, I'm sure this whole spot above can be, there must be a fair value gap inside it. So where is price going? Price is obviously going to 105.50 to clear out those stops. Then it may start coming down to 104.00. All right, Leko, Demola, anything you noticed, any correction, any what?
Sir.
Good morning. So the person that asked us to do DXY, are you okay with this? Mind you, there's news coming out this week, so you may just want to wait for the news to pick a direction. All right, he's okay with it. Over to you, Demola. Thank you very much. Yes, God bless.
All right, sir. Thank you so much for your commentary. So a very big thank you. All right, guys, we'll be convening at 3 o'clock for our New York market color session, where we discuss what how the markets behave, all the analysis we had this morning. We're going to check and see how they played out, the other further opportunity in the market. We're going to look how we're going to maximize them all. Be reminded, it's not a new information again. We know we're coming to Abuja. I've prepared for you. We're waiting for you on the 30th and 31st of May 2024. So ensure you are there. Invite as many as possible. The publicity challenge is still currently going on. I believe the winners of last week will be announced, and then they're going to get their prizes. So if you want to join, the instructions are just simple. Reach out to our DM. We're going to give you all the necessary information you need about it. Our courses are still available, and ATM cash flow training is coming up this week, right? And so you can join. You still have a day to join. So send us a DM on our WhatsApp number, and then we're going to add you to the community. That'll be all for today. Trade safely. Cheers and God bless.